Hello everyone, welcome back to my channel of Learning Made Easy with Rohit. This is Accounting Series Part 2, Financial Statements and Their Relationships. The learning objectives of today will cover the elements of various financial statements, the relationships between the various financial statements, and the flow of information between those financial statements that we will discuss. The financial statements that we will be discussing again today are the income statement, statement of retained earnings, balance sheet, and statement of cash flows. The first one is our income statement, which, as we discussed last time, is also called the profit and loss statement. The elements or the constituents of this statement are revenues, gains, expenses, and losses that gives you your net income. So basically, you take all your revenues, add all the gains, subtract all your expenses and losses, and the net result is either your income or your net loss. The information that this statement communicates is how much income did your business earn during the time period. The second one is statement of retained earnings. The elements of this statement are the beginning retained earnings balance plus your net income plus the other comprehensive income minus your dividends and your ending retained earnings balance. Please keep in mind that in this particular PowerPoint, we are not going to be discussing the other comprehensive income. In one of the future PowerPoints, I will be very happy to get into details of other comprehensive income. But since this is the elementary part of our presentation, we will only focus on the net income. So the statement of retained earnings. What information does this statement communicate? It communicates the company's retained earnings and how they changed over the time period. The third statement is your balance sheet, also called the statement of financial position. The elements of this statement are the assets, liabilities, and owner's equity. This is also your accounting equation. Assets must equal to the sum of liabilities and owner's equity. And as we discussed in our last PowerPoint, the part 1 video, a balance sheet is balanced if the left-hand side, which are your assets, is equal to the right-hand side, which is basically the sum of your liabilities and owner's equity. The information that a balance sheet communicates to the users is the company's financial position at a specific point of time, or you can say at the end of that specific time period. So, just to recap, if you remember in part 1, we had discussed the income statement and the statement of retained earnings. These two statements covers the entire time period from point 1 till the point 2 and whatever happened in between. So for example, if you're talking about the entire year, so we'll talk about January 1st till December 31st in the profit and loss statement and statement of retained earnings. But when we talk about balance sheet, we will only talk about a specific point of time because the information contained in the balance sheet can always change. The fourth statement is the statement of cash flows. The elements are operating cash flows, investing cash flows, financing cash flows. And it basically tells you whether the cash increased or decreased in that particular time period. So basically, what does it communicate? It communicates how much cash was generated or spent during that particular time period. The flow of information between these financial statements takes place something like, as you see on the slide. So the information from the income statement is going to flow to the statement of retained earnings, and from statement of retained earnings, it's going to flow to the balance sheet. And towards the end, you are going to compare the statement of cash flow with the balance sheet. So basically what you will do is you will compare the cash balances from the cash flow statement and your balance sheet. Just a consolidated and specific example. Imagine if your income statement was so small, it looks like this. Okay, so you take your revenues, subtract all your expenses, it gives you your net income. This net income would flow to the statement of retained earnings. And what information would a statement of retained earnings show you? It would show you the beginning retained earnings balance, the net income in that period minus the cash dividends. So basically, the profit that you will distribute to the shareholders, which gives you the ending retained earnings balance. Okay, so the information from income statement in the form of net income or net loss flows to the statement of retained earnings. From the statement of retained earnings, the ending retained earnings balance flows to the shareholders or owner's equity side of the balance sheet in the form of your ending retained earnings balance. Finally, after you have compiled your statement of cash flows, you will compare the cash balance at the end of that particular time period, which in this case is December 31st, 2023. So you are basically calculating the net cash for the entire year. That ending cash balance must equal to the cash balance in the asset side of your balance sheet. So these were the relationships between these financial statements. Once you understand this concept, it will make it very, very easy for you to understand all the other future concepts that we will be talking about in our future videos. This brings us to the end of this video. In the next video, we will talk about the concepts of debits and credits. Thank you very much. In the comment section below, please let me know what other topics you would like me to explain to make learning easy for you. Also, to get the latest notification for my videos, please do not forget to like, subscribe, and hit the bell button. Thank you.